I've been traveling and celebrating my wedding anniversary. There's only going to be one video this weekend, be no video on Sunday. So just to let you know, my next video will be on Monday after the close. Again, I've been telling you for quite a while that the Fed is going to cut in September. More evidence of that this week. The minutes are pointing to a September cut. We had the Jackson Hole retreat speech pointing to a Fed cut in September. Powell gave his speech on Friday. The Jackson Hole retreat. Fed Chair Powell indicates interest rate cuts are just ahead. Quote in the headline, "The time has come for policy to adjust." Now, Powell said that inflation has declined significantly. The labor market is no longer overheated. Well, yeah, we just found out that the Labor Department's cooking the books, which I've been telling you for a long time. We just got the adjustment from March of 2023 to March of 2024. They overestimated by 818,000 jobs. That is ridiculous. If they're doing it on purpose or they are completely incompetent. Again, we continue to see overestimating jobs on the initial report and then it's revised later. It's an accounting gimmick. The fact that we have weakness now starting to show up with the jobs report, the reason why they're going to cut, because again, recession is coming. We have the unemployment rate already predicting a recession. It hasn't been wrong since 1970. It's going to happen. The inverted yield curve predicting a recession is coming. Other recession indicators are pointing to a recession right around the corner. It's going to be cutting for the wrong reasons. After we got that report that, again, we have now the unemployment rate predicting a recession based on the Psalm rule being above the low, 0.5% above it from the last 12 months with a 3-month moving average of the unemployment rate. It's predicting a recession. We got that rally on retail sales. Oh, no, there's nothing to see here. We're not going to have a recession. We're going to have a recession. But again, Vision continues to prove getting fake numbers out of the Labor Department for the jobs data. So here's what we had happen with Powell's Jackson Hole speech Friday. We ended up gapping higher. We had a rally going into Powell's speech that we had some volatility after, getting above the 200, going back to the 200, then going back up and testing that high, and then dropping below the 200 and the 50 as they got a golden cross. Got the 50 above the 200 here on the 5-minute chart, and then again in the latter part of the session went back up towards the highs, closing near the highs of the session. Again, testing the highs Thursday where we had the gap and trap on the intraday basis. We gapped higher and then sold off. Had a bounce, dropping below the 200 and then testing it and then continuing to drop and sold off for the session. That created the bearish engulfing. The candlestick has not been confirmed, but that's a price action on the intraday charts for Powell's Jackson Hole speech. Now, with the sell-off with the bearish engulfing, which was this sell-off right here on the 15-minute chart, again, that created this divergence that only gave us a sell-off back towards the 200. Again, gapping higher Friday. If we continue, again, we already have a divergence on the 2-minute chart. We might get a triple divergence, and if we do, then this trend line is to be watched right here. And again, point divergences here on the intraday charts. If that does end up happening, which again, you could see the triple divergence on the 60-minute chart. I told you earlier in the week I was watching this divergence forming early on in the week, and I was watching to see if it would create any volatility. It only allowed price to correct sideways, and then we went higher, and we actually completed the divergence. And I told you that this may not produce a reversal if we get the divergence on the RSI 60-minute chart. That did complete right after this, and we got another reference point of a divergence here, and that gave us the Thursday sell-off. Now we're turning back up on Friday, and while the bar is still red, the little blue arrow is turning back up, and we're just going back and forth and really, again, getting a multiple point divergence. We came up here and dipped slightly. You can't even really see it, but dipped slightly below the center line and then turned back up with Powell. And so again, it's likely going to be that we're going to complete a divergence here with the Monday session, or with futures Sunday. That could create the triple divergence on the S&P 60-minute chart, and you would have a multiple point divergence here on the 60 or on the 4-hour chart of futures, the mini futures of the S&P. MACD can turn back up and then turn down. Again, we got a divergence here, but it only gave us a sideways correction. And again, we're likely forming a multiple point divergence here on these 4-hour charts. This is the S&P futures 4-hour chart, almost equivalent to the S&P 60-minute chart of the S&P cash. NASDAQ 4-hour chart of futures, it did go negative. Okay, the MACD has not gone into negative territory, but again, it could go back into positive territory, join the S&P, and again, still form a multiple point divergence and then turn. We've seen red here, but really only going sideways. We're bouncing off these 50-period moving averages. The 50s are getting above the 200 finally on futures. Already had that with those hourly charts, but again, wouldn't be surprised to see a lower tower develop here. We've already had this divergence here only give us the sideways move right here, and that ended up giving us the divergence on those 60-minute charts. We got another pop right here. The sell-off on Thursday took us negative. Likely that we're going to go back into positive territory here on the awesome oscillator. The MACD will probably firm up, and you'll probably see these divergences complete early on next week and give us some kind of reversal pullback. Whether the S&P can make a new high with this divergence that forms. But this is right here the NASDAQ 100 futures. I just showed you the S&P. Now let me show you those 60-minute charts that we might form triple divergences with those RSIs in the 60-minute time frame. Please support the channel with the link directly below that allows me to be able to provide you this information. Follow the link, it'll take you to a secured site. Donate any amount you want. Take a moment to do that. I would appreciate it. Thank you for your consideration for that. On Friday, the VIX was down 9.63%, pushing back down slightly below the 50. The 50 is above the 200. We've had the bullish falling wedge. We've broken out. That's given us a sideways kind of move with the S&P 500 that will likely end up forming a multiple point divergence on the hourly chart. See in this video, we're getting these wild swings up and down. So I'm bringing up these 4-hour charts of futures and the S&P 500 here needed a divergence on indicators 60-minute time frame, and we started to see the sell-off with Thursday and a bearish engulfing. Momentum started to turned right back to bullish with Powell, so it's likely on the 4-hour chart here. And NASDAQ, we're probably going to see a divergence develop, and that will likely form a triple negative divergence on the 60-minute charts. S&P 4-hour chart here. By the way, that happened back up here. We formed this divergence in the 4-hour time frame and a triple divergence on the 60-minute chart of the S&P. Okay, we saw a negative divergence form on the 60-minute chart of the S&P that on the 4-hour chart here, or on NASDAQ, I should say. We got it on S&P too, but we formed that negative divergence on the 60-minute charts. NASDAQ got this bearish momentum signal. It's still bearish. NASDAQ hasn't recovered like S&P back up near the highs. We've had a partial recovery. Again, it's likely we're going to turn back up and form a divergence on the 4-hour chart, which could form a triple negative divergence on the 60-minute chart of the NASDAQ. 4-hour time frame, we saw sell signals up here. We saw bullish signals here. We don't have that yet, so it's likely we're still going to form a divergence right here. Here we had a bullish signal, but it wasn't confirmed. It didn't flip the trend. P did the same thing in the 4-hour time frame. So I'll be watching to see if we get those signals. Friday, the momentum turned back up on S&P. It'll probably turn back up on Monday for NASDAQ. And then we'll see what happens as we go into next week. We're going to get the NVDA earnings on Wednesday that possibly trigger a sell-off. But I'll be watching the divergences as they develop here. Multiple point on the 60-minute chart, which you're going to see in this video, and the divergence here in the 4-hour time frame on NASDAQ. These intraday charts, 15-minute chart, 30-minute chart, if they try to push higher, we could see a triple negative divergence on the 60-minute chart. This is the 15-minute chart one more time. 30-minute chart here, same thing. Again, we could move back to this trend line or just overthrow it on the S&P. A new high would be above the 5670 area. High was 5669 and some change. Again, do we end up getting this divergence and then pulling back? And then if we do, we'll be watching the gaps. But you got this larger divergence, could be under construction. This divergence gave us the Thursday sell-off. Do we now get a multiple point divergence on the 60-minute chart and complete one here on the 30-minute chart? We'll see the 60-minute chart now. Here's the 60-minute chart. The S&P closed at 5634. The previous peak in July is at 50. I got the wrong number on there. Let me fix that. 5669. So the 5670 area, that is directly overhead. Do we reach that area, completed diversions, or have it be close but no cigar? There is that gap fill, and that's right at that high, that 5670 area. Never did fill that gap. The gap at the highs, I told you I thought we'd end up moving to new highs maybe sooner rather than later here. But again, here are other gaps that we have to the downside that will eventually be filled. And over 3 weeks here, nearly a 10% drop. In 3 sessions, we ended up dropping by 8% from this lower high. Again, rebounding back up over 3 weeks, and now here we have a possible triple divergence. We had the negative divergence. The bearish engulfing candlestick formed. It was not confirmed. We bounced off the 50-period moving average. We dropped below the momentum line, the momentum cloud, but got back above them. So again, it's likely that we're going to form a triple divergence here, very similar to what we had over here. We had a divergence form, sold off back towards support levels. Here we took them out slightly and went to the 50. Here we found support at the 20 period, the momentum line, the momentum cloud, went back up and formed the divergence, and this 3-week sell-off followed. And again, if we do see this happen, you got a possible double top on the S&P. Be watching to see if we complete a topping process sooner rather than later. And if you do, you have a possible double top in play on the S&P 500. It looks like we're going to try to form triple divergence early on next week. MACD is staying in positive territory. Now it's firming up and moving above the signal line. So again, could form a divergence right here on the MACD. We've already had the RSI. We've already had the divergence back over here. Prices corrected sideways. Again, another reference point right here with a lower high on the MACD, and that gave us the Thursday sell-off, but there was no follow-through to that. And now we're seeing the MACD firm back up above zero, above the center line, and coming back up above the momentum cloud of momentum line. So again, it's likely we're going to form a divergence. If we do, then if we go up towards this trend line, we can move to a new high, throw it, and you've got a possible double top there. There is the possibility of a 5-leg push higher. I talked about this previously. I talked about the possibility that we have a 1, a 2, this is 3, and that we, or I should say to here, and then this is 4, and we're now going to get 5. We're now going to get 5. It's very, very possible. Now, regarding the Elliott wave count, again, Elliott wave is speculation, but it could be we do have a 5-leg push higher, that we have 1, 2, 3, then 4, and then now we're going to get 5 and peak out ahead of the Fed's rate cut. Could play out that way, or this is the completing of 3 up here if we do go higher, or just slightly higher, hitting this trend line right here. If we go up to this level, just moved above it and then just quickly turned, you could still get a 4 here, or even a deeper 4, and then come back up and get 5, going closer to the Fed rate cut into September. So again, it could be that we have a 5-leg push higher under construction. Whether completing wave 3 here or up here remains to be seen. I have the immediate completing of the 5-leg structure in black. I have it in red, Again, this is 3, you move to a new high, but then you pull back, and then you go move to a new high again, and it's us closer to the Fed pivot in September. Again, and this assumes that we have completed 3 over here, that this is 4, and we're now getting a 5 here. So again, Elliott wave is speculation, but just some of the counts I'm looking at if we do move to a new high early on next week, or if we pull back and then move to a new high at a later date. We go up, we hit that previous peak in July and turn down. Again, you will have a triple negative divergence completing on the 60-minute chart. And again, you have the divergence already on the MACD. You could also form a multiple point divergence there. Again, we bounced out the 50-period moving average. We're continuing to hold above the trending cloud. Short-term momentum tried to turn bearish, turned back up, back above the momentum line and the 20-period moving average. So again, do go up here. Again, we could complete this divergence, and we could see immediate selling pressure. The S&P may not get as big a sell-off as NASDAQ. NASDAQ very well could be forming a large ABC counter trend move, while S&P is forming a 5-leg push higher on into new highs to complete the topping process. Now, with the gap higher, we saw momentum on the 60-minute chart turn back up, and has opened the door for another reference point of a divergence, again, that could test the July peak early on next week. So we'll be watching the 60-minute chart again, and that RSI for the divergence, and potentially we could see it here on momentum and ACD and other indicators. Now, momentum in the daily time frame, we've come back up to extremes here. It's not yet rolled over. Again, attempt to fill the gap and move to a new high, sell off, and still come back up to these levels. Again, form a topping process ahead of the Fed, completing the peak with the Fed or just after the Fed. We just finished the session here on the 23rd, and then so we have this 1, 2, 3.5 weeks to the Fed pivot on September 18th. The topping process is likely going to form, again, lead a peak ahead of that September meeting, with that September meeting, or just after it. Now again, NASDAQ, right here we have the divergence completed. Again, I talked about with futures that we still might see multiple point diversions here form on NASDAQ. Now NASDAQ gapped back up off the 50-period moving average. Didn't move back up towards the highs like S&P did. We're still below them. They reach it, but we did get the divergence. Probably going to see a multiple point divergence. NASDAQ is very far away from the 20,400 area, so even if we come up here again, I think you could still see a sell-off and then coming back up and filling that gap as we move towards the Fed meeting. So again, we'll be watching to see how it unfolds. And the next sell-off, we might see a bigger sell-off with NASDAQ as we did over here. NASDAQ dropped nearly 16%, while S&P dropped just under 10%. MACD looks the same. Again, we had the divergence form. Again, trying to firm up at the center line. Probably going to see a push higher, but then a push down, completing a multiple point divergence, and then a push down or go a little higher there, and push on down, and then again possibly an ABC move going closer towards the Fed pivot on September 18th. Showed you the gap fills down here on the S&P 500. Showed you the gap fill up here to fill the gap to test the high. Take a look at NASDAQ, and NASDAQ has come up and filled this gap up here. We still have the one way up here at 20,400. Again, we could pull back before we move to fill that gap. As I've said, I think that that is likely that we're, even if we go higher to form the divergence, we could see something like this where, again, you get an ABC move and still don't move to a new high, but go back and fill that gap. So again, I'll be watching that. We are coming up to extremes. I wouldn't be surprised to see the divergence complete and then a rollover and possibly a divergence complete here. If we get a bigger sell-off, a real big sell-off, could come back down to extremes and then come back up by going into the September rate cut. Those divergences start completing on the 60-minute charts. I'll be watching to see if we start rolling over here with momentum, the daily time frame. P close to the highs, NASDAQ not near them, and I think NASDAQ peaked on July 10th. Now again, with Powell, we're bouncing out the 50-period moving average after the bearish engulfing candlestick on Thursday. We had a gap and trap intraday, but gapping higher. The NASDAQ Friday with Powell's at Jackson Hole, momentum turning back up just like on the S&P 500. So again, we'll see if we form a multiple point divergence on things like the RSI, ACD on the 60-minute chart. Momentum is turning back up, and we're just getting these wild swings. This was a 3-week decline right here with the 15.7% sell-off, nearly 16%. In 3 days, we dropped almost 11%, and then over the last 3 weeks, a big rebound back up. So again, these big wild swings. Again, I do believe S&P or NASDAQ peaked back over here with these negative divergences, but I believe it will go higher to fill this gap at 20,400. Whether that's sooner or later, we'll see. But I think that we're going to likely form a divergence, come back down, and then do it closer as we move closer towards the Fed's rate cut there with the pivot on September 18th. And remember, we've had Jeff Bezos and other insiders selling into tech rally. Amazon, again, a sharp decline. It's come back up towards the gap fill in the 50-period moving average, but we've seen, Jeff Bezos selling massive amounts of stock. See Warren Buffett downsizing positions in a dramatic way and hoarding cash. That's what happens at tops. Got insiders selling into the rally. So just keep that in mind. We are in a topping process. This week we have NVDA earnings Wednesday the 28th. Continue to watch these Wall Street darlings, the leadership, because again, we're seeing distribution with the rallies. Like here on Amazon, we are seeing selling into the rallies, and with the rally back up, we're still below the 50 period at this moment, and the MACD is still negative. Size just pushing above 50, but again, it's been in the lower region, in the negative region. Again, Magnificent Seven stocks. Look at Alphabet here. Alphabet, again, had a big sell-off down to the 200, towards it, just above it. We've had this rebound, but it hasn't recovered back up to the highs. Same thing as Amazon. RSI still below 50 at this point with Alphabet. MACD looks very similar to the MACD on Amazon. It's turned up, but it's still in the negative region after the negative divergence took price sharply lower for Alphabet. And again, on just below the 200, just below the 50. Alphabet here, nowhere near it. You still have this gap fill up here. So again, we'll be watching some of these Magnificent Seven stocks. Their recovery has been lackluster. And again, possible bear flag forming here on Alphabet. Meta, a similar situation here. It's gone sideways, but it went down to the 200, got back above it, going back and testing the highs. It's really just been going sideways. It's not moving out of this trading range sharply higher with the rally. So again, attention to some of these leadership stocks, the Magnificent Seven, but Meta, the MACD in positive territory. Amazon and Alphabet do not. But again, it's just in a sideways trading range here for Meta. Microsoft, it looks very similar to Alphabet and to Amazon. Again, it had a big sell-off, had a recovery, but it's still under the 50-period moving average. It bounced off the 200. The others did. It violated it, but it bounced off of it. And again, it's still got the MACD in the negative territory here. We've had the RSI move up to 50, but then turn down off of it. Similar to Amazon, but again, we're not back up at the highs with Microsoft. We're not back up at the highs with Amazon or Alphabet. But meanwhile, we've got Meta back up at the highs going sideways. So just pay attention to this. Again, that S&P and NASDAQ got back above their 50-period moving averages. We haven't seen that with these Magnificent Seven stocks that took a brutal beating here with the July August sell-off. Apple fared a little better. It got back above the 50 period, filled this gap. It's come back up above the 50 period moving average. Others are below it, but again, it's still not at new highs, and the RSI is above 50. Others are struggling there, and the MACD firmed up just in negative territory and holding above the center line. So again, NASDAQ gets another sell-off. You might see an ABC type correction on NASDAQ, be something similar with some of these other Magnificent Seven stocks or other stocks that have had leadership roles. Some of the semiconductors. Hold daily here. We're going to get NVIDIA earnings next week. It's come back up to fill the gap installed there. Still not making new highs, but again, NVIDIA had been leading the NASDAQ. It diverged from it back over here. NASDAQ made a new high. NVIDIA did not. And now, again, if NVIDIA starts to sell off, well, NASDAQ, we do have earnings. Seeing other sell-offs with earnings. It can break to a new high, then maybe NASDAQ attempts that. I think NASDAQ's going to end up going down and then rebounding back up and moving back to fill the gap at 20,400. Watch NVIDIA, again, that can help or hurt NASDAQ depending on what happens, especially as we go into next week with earnings. On Wednesday, we got 9 counts on NASDAQ and on the S&P daily charts. The 9 counts show price exhaustion in a certain direction. This is the NASDAQ daily chart. It was a 9 count that marked the July 10th peak, and we turned immediately, attempted a Fibonacci retracement off the 10-period moving average, and ended up dumping 15.75%. We've attempted the rebound up to our 78.6 Fibonacci on NASDAQ. Wednesday, getting a 9 count that will end in one of 3 ways. Either we'll get a pullback, which we started to do with the bearish engulfing that has not been confirmed, but we can get a pullback, a small one or a big one, followed by a trend extension back up to fill this gap up here, which is at 20,400. I think that's going to end up happening. We can get even a much bigger sell-off and then rebound back up in a large ABC move. I think that is very, very possible with NASDAQ. I think there's a very good chance NASDAQ peaked back over here on July 10th, as I told you at the time on July 11th, and talking about ever since. S&P is still going to make new highs at some point, whether sooner or later. Here we had a 9 count signal give us just a pullback, a trend extension happen, and that marked the peak right there. Do we see something like that where we pull back and go and then go back up? I think that's going to likely be the case. We're forming these multiple point divergences. Now, I want to bring to your attention, though, with the 9 count, you can get an immediate reversal with the 9 count, like we did over here. The 9 count marked the very top, happened immediately. Other times, you can get a 9 count and you go a little higher, and you get a reversal or a pullback, and then it could be followed by a trend extension, or maybe just a mild pullback. But we'll be watching to see how it unfolds. I think you're forming an ABC move here in all likelihood on NASDAQ, whether with a mild pullback or a bigger one, and then a bigger rally to fill the gap. But I do think that eventually we're going to go higher. And again, the 9 count, we could still go a little bit higher with the diversions and then turn without filling that gap immediately. It is possible we do it immediately. Try to complete a top sooner than later. If S&P pushes up to new highs, we try to fill this gap right here, right now, then that is certainly possible. I think that they will end up diverging from one another. I believe that we're in a topping process, as I've said. I think NASDAQ is likely already peaked, whether we're going to do this right now or more likely, if we have a 5-leg push lower here, you're going to get an ABC formation, something that looks like this or something deeper that looks like this, and come back up and fill that gap. So that's what I think is likely the likely scenario and under construction. The 9 count is saying, hey, prices are getting tired. maybe we're going to start turning right here immediately or go a little bit higher. We got a bearish engulfing on Thursday, but we got a bullish inside day, a candle of indecision in the form of a spinning top on Friday. So again, we still can go a little bit higher and then turn. And again, it will be the case that we end up forming a triple negative divergence on the RSI on those 60-minute charts. We have a divergence in place that gave us so far this sell-off right here, and attempted rebound now off of the 50-period moving average here on the daily chart of NASDAQ. So you have a bullish inside day, you have a bearish engulfing that has not yet been confirmed. We needed a close below it and a confirmation and then the follow-through bar. So there still may be more work to be done, but you did get a 9 count, which again could be suggesting a pullback or reversal is getting ready to happen. NASDAQ daily chart here. Before I leave the chart again, we've dropped 15.75%, rebounded to the 78.6 Fibonacci, just under it. So again, we'll be watching. If we try to go higher immediately, again, you got your gap filled directly overhead at 20,400. We are just under 20,000. It may be that we have to get that pullback before getting that bigger move and push above 20,000 on NASDAQ. Remember, we got that 13.9 on the weekly chart for NASDAQ and S&P. And again, I think there's a very good chance the topping tail that formed the week after when we got our top on July 10th, I think that is going to likely hold as a top with this reversal pattern. The 13.9 is a double sequence count sell signal, but do get a sell-off. The divergences I'm going to show you in this video, again, could be we get something like this where we come back up, sell off, we come back up, double top pattern, but get a lower high in a 3-leg push back up, counter trend rally. Over here we had the bearish engulf, or the bearish pattern in the form of an evening star right here, and that was right into those trend lines of resistance. So again, watch NASDAQ, S&P, daily chart. S&P got that bearish engulfing, completed a divergence, and we started to see momentum flip. We got Powell, we came back up, confirmation. Again, the candlesticks are meaningless unless they get confirmation and a follow through. The bearish engulfing did not get a confirmation. It still could, but there's no confirmation. Got an inside day on NASDAQ, the real body here, inside day on S&P 500, inside the previous day's body. We got a 9 count on Wednesday also. So again, you've got bearish engulfing candlesticks that have not been confirmed. We had a drop of nearly 10%, 9.68% on S&P, 15.75% on NASDAQ. We've had this rebound back up. We got above the moving averages, filled the gaps. We've had gaps on the way up here and over here. 4 gaps on S&P, 3 on NASDAQ, gaps higher. If we do start to sell off, we'll be watching that. But you did get a 9 count here. You had a 9 count here. You went a little higher. Again, other times you turn with it immediately. Here we've gone just a little bit higher with the 2 bars, the highs of the 2 bars after the 9 count on Wednesday, the Thursday and the Friday session. So again, I'll show you the charts in this video. We get a multiple point divergence. If we do, again, S&P might try to reach a new high, might try to get a top immediately. We're likely going to see a topping process complete ahead of the Fed September 18th meeting, with the Fed meeting, or just after the meeting. 1,000, you completed the top before. We had already started to sell off by the time we got the rate cut. NASDAQ, S&P had already sold off 20%. In 2007, the Fed did the rate cut. About 3 weeks later, so the market peaked. So again, we'll be watching the 9 count. Does that take us higher immediately and then we turn, or do we turn and then come back up here and do it? Again, you've got a possible 5-leg push higher here on the intraday charts. I've talked about that, and I'll show that to you again. We did get 9 counts on the daily charts on NASDAQ and S&P here on Wednesday on both of them. To result in either an immediate trend extension, a pullback and a trend extension, or a reversal, one of those 3 scenarios. Now we got the 10 back above the 50, the 20 still below it. Again, eventually, if the 20 does get back above it, again, we could see an overall topping process. Moving averages tangle back and forth. And we have the same possible scenario with the S&P, and that would be a double top pattern. Same as I've been talking about with NASDAQ. When NASDAQ will likely make a lower high, S&P will probably make a higher high, whether that's right now or if we get a sell-off first and then come back up. It's also a possibility. I think S&P is going to make a new high just before September, weeks ahead of it, with the September 18th meeting or after it. S&P daily here. Move above that 78.6 Fibonacci. So again, the door is now open to make a new high. We've recovered. Again, these wild swings. We had a big push up here on light volume. We had distribution over 3 weeks. And then that wild 3-day drop of 8% on S&P. And then now this big move back up over 3 weeks. 3-week move down, 3-week move on a recovery.